Today, we are cracking open the playbook of an absolute legend in investing. He came up with a strategy for finding those once-in-a-lifetime companies, and you know what? It's probably more relevant today than it has ever been. Let's dive right in. You know, this is the big question, isn't it? It's the one every single one of us who invests dreams of answering. How in the world do you spot that one company, that 10-bagger, that can just completely change the game for your entire portfolio? It feels like finding a needle in a haystack, but believe it or not, one man actually created a system for it. And that man's name was Philip Fisher. Now look at this quote. We've all heard of Benjamin Graham, right? The father of value investing. But who is this Fisher guy? The one that Warren Buffett, the greatest investor of all time, says makes up a critical 15% of his own genius. Well, that's what we're here to find out. So let's pull back the curtain on this unsung genius of growth investing, a guy whose ideas from way back in the 1950s are, honestly, tailor-made for the crazy, innovative, tech-first world we live in right now. So who was Philip Fisher? Well, for starters, he was not your typical Wall Street numbers guy. Kicking things off in the 1930s, he had this radical idea to look beyond the cold hard numbers on a balance sheet and focus on something he called a company's quality. And did it pay off? Oh yeah. His firm got 15 times returns over 20 years because he got in super early on innovators like Motorola, a company he loved for its obsession with research and development. He was a master at seeing greatness way, way before anyone else. So what was his big secret? It all boiled down to a philosophy that was so simple, so powerful, and, for its time, completely out there. It was all about finding outstanding companies. And here it is. This is the core of the whole thing. Fisher believed the real path to building wealth wasn't frantically trading stocks or spreading your money across 100 so-so businesses. No, it was about finding a tiny number of truly, truly exceptional companies and then doing the hardest thing possible. Nothing. You just hold on, pretty much forever. And he had a very clear set of rules for this game. He was on the hunt for companies that could grow by at least 10% a year for a decade or more. And he said you should put your money into just 8 to 12 stocks that you've researched inside and out. See, for Fisher, the real risk wasn't owning just a few stocks. The real risk was not truly knowing what you own. From there, you just had to be patient and let that incredible power of compounding do its thing. Okay, but how do you actually find these amazing companies? This is where it gets really practical. Fisher gave us a toolkit, his famous 15-point checklist. I want you to think of it like a really intense, head-to-toe health checkup for any stock you're thinking about buying. Yep, that's the magic number. Not 5, not 10. Fisher developed 15 different criteria that a company absolutely had to meet before he would even consider it superior. It was his system for sorting the merely good from the truly, lastingly great. Now, I know what you're thinking. 15 points sounds like a lot to juggle, but here's the brilliant part. They all basically fall into 3 main buckets. First, is the management team excellent and can you trust them? Second, is the business itself strong? You know, its products, its profits. And third, and this is a big one, can this growth actually last for the long haul? Let's just zoom in on a couple of these because they're so insightful. For instance, he'd ask, is the company's research and development better than everyone else's? That's what ensures it stays ahead. Or does it have really high profit margins? That tells you it has real power in its industry. And what about the people in charge? Fisher demanded both integrity to make sure they were working for shareholders and depth, so the whole company didn't fall apart if the brilliant founder left. See? These questions go so much deeper than just a spreadsheet. Now, to answer all those questions on the checklist, you had to do more than just read some reports. Fisher had a secret weapon, a technique he called Scuttlebutt. It's basically the art of being an investment detective. Scuttlebutt is a funny word, right? But what it really means is getting your hands dirty. It means getting out there and talking to everybody connected to the company, the actual customers who use the products, the competitors who are trying to crush them, the suppliers who work with them, and yeah, even ex-employees. This is how you find the real story that the numbers will never, ever tell you. And there's a real process to it. You gather intel from every possible angle. You talk to customers to find out if they're obsessed with the product. You ask competitors what they're genuinely afraid of. You chat with suppliers and former employees. But the last step is the most important. You cross-check everything you've heard to figure out what's fact and what's just gossip. That's how you uncover the hidden truth about what makes a company special. All right, so you've done the work. You've used the checklist, you've done your detective work, and you've found a great company. So now what? This is the final piece of the puzzle, knowing when to actually pull the trigger, and maybe even more importantly, when not to. Fisher's discipline here was just crystal clear. The absolute best time to buy one of these outstanding companies is when the rest of the market is down on it for some silly temporary reason. That's when you get an amazing business on sale. And when do you sell? Get this, almost never. Fisher said you should only sell for 2 reasons. 1, you made a mistake in your original research, or 2, the company has fundamentally lost what made it great. You never sell just because the stock price went down. You might be sitting there thinking, okay, this is cool, but it's from 1958. Is it really for today? And the answer is a resounding yes. In our economy that's all about tech and constant innovation, Fisher's ideas are more on point than ever. His focus on things like brand power and R&D leadership, well, that's exactly what we call a moat today, that durable, competitive advantage that keeps rivals away. So let's just boil it all down. What are the big takeaways from the Philip Fisher playbook? First, always focus on quality, not quantity. A few great businesses beat 100 mediocre ones. Second, do your homework, your detective work with the Scuttlebutt method. Third, use that 15-point checklist to find true greatness. And finally, think in decades, not days. Buy for the long haul and almost never sell. And that really just leaves us with one fascinating question to chew on. If you take this incredible framework and apply it to the world today, which of our modern innovators, the big tech companies, the biotech startups, which of them do you think would actually pass all 15 points of Philip Fisher's test? That's a great piece of homework. Thanks so much for joining me.